Hello friends, today we are going to discuss Schedule 1 provided under the CGST Act, particularly Para 1 in this short video. Before that, let's understand what is a deemed supply. Think you only pay GST when you issue a bill? Wrong. Under Schedule 1 of the CGST Act, certain supplies are deemed to be made even if there is no consideration or no money received, and there is no invoice as well. Let's break down these 4 triggers. These are the 4 triggers under Schedule 1 of the CGST Act, which are considered as deemed supply even if the transaction happens without the consideration. We will discuss one by one these triggers in the current video as well as in the ensuing videos. In this video, we are going to talk about the first para of Schedule 1, that is permanent transfer, disposal of business assets where input tax credit has been availed. Now, if you take a business asset on which you have claimed input tax credit and permanently removed it from your business, maybe for personal use, gifting, or even destruction, GST law says you have made a supply and you must pay tax. For example, you bought a laptop for your business and claimed rupees 10,000 as input tax credit. Then you took it home for your personal use. Do you need to pay GST? Yes, and the reason is Schedule 1 of the CGST Act. So there are 3 key conditions under this para for a transaction to be treated as a supply even if there was no consideration. First, it should be a business asset. Note, business asset has not been defined under the GST law, but in common parlance, it is an asset which has been used for business and you have recorded in your books. It can be your fixed asset or an inventory. The second condition required is you have claimed input tax credit on it. Note, Section 17(5) of the CGST Act that you will come across while you will learn the input tax credit concept in detail. You will see there are certain items on which input tax credit is blocked or is ineligible. Examples are motor cars. So if you buy a motor car even for your business, the input tax credit on the tax you paid is blocked and restricted. Therefore, if you dispose the motor car which you used for your business, no GST will apply on its supply, as you have not claimed input tax credit at the time of its purchase. The third condition required is you permanently transfer or dispose it, and you just don't do a temporary disposal. Now let's take some examples. I have a clothes business and I'm selling shirts, etc. Now, a friend I met a few days back, I just gifted one of the shirts to him. Government say it is a supply. Why? Because you have disposed of the shirt from your business. It was a business asset and you disposed it off permanently even if you did not receive any consideration. So what is the logic of charging GST here? Because you took a tax benefit, that is input tax credit, when you bought it for your business, either in form of your raw materials or either if you are just purchasing from a contract manufacturer and you putting your brand and you selling it onwards. Still, whatever you have purchased for your business, you may have claimed input tax credit on it. So now if you remove it from business even without paying GST, the government loses that tax. So Schedule 1 says pay GST at the time of removal based on the asset's value then. Think of it as reverse input tax credit. You claimed credit, now you must discharge its tax. So let's now take some examples of this para. First is mobile shop owner takes a phone from stock for personal use. Will GST apply? Yes. Why? There was a permanent transfer of a business asset on which you may have claimed input tax credit at the time of its purchase. Now, second is giving old office furniture to employees as a gift, which is of a value exceeding 50,000 rupees. Note that as per para 2 of Schedule 1, gifts not exceeding 50,000 rupees in value is neither treated as a supply of goods or services or both. So now in this case, will GST apply? Yes, because first it is above 50,000 value. Second, it was given as a gift and no consideration was received. Third, it was a business asset because it was of office furniture. Fourth, you have claimed input tax credit on it. And fifth, it was a permanent disposal. Now, third example, destroying expired goods from inventory. Will GST apply? Again, yes. Why? Because it was a business asset, inventory. Then second, you have claimed input tax credit on it while you had taken it in the books. And third, you permanently destroyed it. So there was a permanent transfer or disposal. So it meets all those three conditions. Now, fourth example, you used office printer at home for 2 days and then you returned it back. Will GST apply? No, because the condition of permanent transfer is not fulfilled here. It will not be termed as a deemed supply and therefore no GST will apply. Fifth example, toy manufacturer permanently transfers the motor vehicle free of cost. Will GST apply? No. Why? As we had discussed earlier, under section 17(5), input tax credit on a motor vehicle is blocked. Therefore, in this case, as ITC was not availed at the time of purchase, so now even if the toy manufacturer is permanently disposing of that motor vehicle, still no GST will apply on such a transaction. We will discuss the other paras of the Schedule 1 in other short videos. Please like, share and subscribe if you found this video useful. Thank you for watching.